What you think it's going to be a $100,000 asset soon, 200?
Yes.
VanEck's head of digital asset research, Matthew Siegel, is not only extremely bullish on the crypto market, but as of March 2024, VanEck had over $100 billion in assets under management, and that number continues to grow.
Our bet is that this is a very bullish setup for Bitcoin into the election. We saw the exact same pattern in 2020 where Bitcoin lagged with low volatility, and then once a winner was announced, we had a high vol rally as new buyers come into this market. And that's the great thing about Bitcoin, is that every day there's new buyers being born. It's kind of like the video game industry. The olds who hate it die off, the new folks are buying it. And what we think is that once the election result is finalized, Moody's is going to downgrade US sovereign debt, and that could be a catalyst for Bitcoin.
So what I want to do for you guys in this video is show you my plan to make millions of dollars in crypto before the end of this bull run. We're going to talk about understanding this bull run, how to increase your capital to be able to invest before the bull run ends so you can make more multiples. We're going to talk about timing and exit strategy, essentially when to take profits, when I'm taking profits. We're going to talk about a portfolio diversification strategy for high returns, leveraging emerging sectors like L1, real world assets, meme coins, artificial intelligence, etc. And then top cryptocurrencies that I am buying now, our research team is looking into, and how to be able to construct a winning portfolio to maximize your gains while minimizing your risk, so you can make the most amount of money possible this entire bull run.
Doesn't gold correlate with the dollar and with M2 as well? And gold and Bitcoin seemed like the correlation broke down a couple of times recently.
Bitcoin is a chameleon. Its correlations change over time. It's hard to predict what it's going to be correlated with over the short term, over the long term.
But you really say it's because of the 21 million and it's fixed amount is out there, therefore the debasement of the currency favors that. I mean, that's...
Yeah, it's
some people call that fairy dust.
It's a non-U.S. asset. It's an emerging markets asset. And while we were all hyperventilating about the election over the last week, BRICS had a conference in Russia. There's 6 new members of BRICS this year. So BRICS GDP is now greater than the combined GDP of G7. Of the 6 new members, 3 of them, Argentina, the UAE, and Ethiopia, are now mining Bitcoin with government resources. So there is tremendous urgency outside of the U.S. to find a way to circumvent the irresponsible fiscal policy that we've been running here in the U.S. In fact, Russia announced an initiative. Their sovereign wealth fund is going to invest in a regional initiative to build Bitcoin mining and AI infrastructure throughout BRICS, with an idea of settling global trade in Bitcoin. So look, someday, I don't know if it's 5 years, 10 years, Putin's going to die. We're going to look to reintegrate some of these countries into the world financial system, and they're going to be trading with Bitcoin. What are we going to be doing?
Okay.
All right, bull runners, welcome back to the channel. So the first thing that we need to dive into is understanding the bull run to give you a bigger picture on what's about to happen over the next 6 months, especially leading into election. I mean, depending on when you're watching this video, the uncertainty around who's going to get elected is certainly what's causing this consolidation period, and, you know, no decisive move to the upside or the downside to break all-time highs. However, I'm going to discuss in this video where I see the markets going, and also how to increase your capital to be able to invest more before the bull run ends. So first things first, on bullrunners.com, our early bird list is closing soon. For those of you guys that have seen this over the past year, you guys have been subscribed, wondering when we are going to be launching our crypto education platform. Well, we are launching to the general public in 8 days, 4 hours, 43 minutes, and 32 seconds. Obviously, that countdown timer is going to keep going down depending on when you're watching this video. So what I want you to do right now, for those of you guys that are on the early bird list, is check your email inbox over the next couple days. You're going to be getting access early to the platform before the general public does. Once this countdown timer expires, it's going to go right to the page to get started. But for the first 1,000 early bird members, you guys are going to get some exclusive bonuses. You're going to be one of the founding members, and we have some exciting stuff planned for you guys. So if you're not on this list right now, go get access. You guys still have 8 days left, and then once the countdown expires, we're going live to the general public here on YouTube and everywhere else all across the industry, because we obviously have one of the largest channels in the world for crypto, and also we have one of the largest daily email newsletters for crypto news, analysis, and all that good stuff. So just put in your best email address. I'm not going to talk too much about that because we have a lot to get into in this video, but 8 days left. So we are extremely excited for you guys, and we're going to run that. Now, first things first, let's talk about what the crypto market is looking like right now, because with institutional adoption happening right now, a lot of people have asked us, well, if BlackRock, the world's largest asset manager with over $10 trillion assets under management, has tipped that domino to Van Eck, you got ARK 21 shares, you got Grayscale, you got Bitwise, you have so many different institutional companies coming into the market, dumping millions and then billions of dollars into Bitcoin. Why is the price not going up? Well, it's the thing called OTC deals. I've talked with companies, and I can't disclose too much information on this stuff, but BlackRock is essentially OTC behind the scenes, exchanging hands from old Bitcoin holders that had bought Bitcoin anywhere from $1 to $100 at a discounted price to where it doesn't move the spot price on the open market. And, those deals are happening behind the scenes without retail, the common folk that watches like NBC, ABC, Fox News, that isn't paying any attention to crypto right now because they're just too busy focused on what's happening, with their hometown, fires, hurricanes, all that stuff, whatever it is, just basic stuff. They're watching Netflix, they're wasting their time. They're not focused on where billions of dollars is going, what central banks are doing. And so there hasn't been that. There's been some mainstream, push in terms of interviews, CEO Larry Fink going out there and talking about how he's bullish, the interview that you guys just saw, but we have not really seen the institutional push that happened, or the mainstream media push that happened during the peak of the last bull run. And so this leads me to why and what's about to happen next, because institutions have been loading up before they plan their marketing campaigns with the media companies that they control. BlackRock owns most of the media companies out there. They're one of the largest investors. If you go look at the like VC or the investor sheet for all these big companies like Disney and all these media companies, BlackRock and other big companies are up there with them. And so they control the narrative. They control the money. And so if you have the money, you can control the narrative of the marketing. And so when they start ushering in their marketing push for the companies that they control, that's when retail starts piling in. And one telltale sign of that is Google Trends. This gives us an idea of what retail is searching all across the globe every single second of the day. So for example, if you guys go to trends.google.com/trends and you type on this explore box right here and you type in, let's just say Bitcoin, which would be something that virtually everybody's heard of, right? We'll get into altcoins here in a little bit, but Bitcoin is the leader of the market. We need to look at what's happening with Bitcoin as a macro market view, and then that leads us into the rotation that will take place in altcoins in the later of this video. So when I type in Bitcoin and then I sort worldwide and then I click within the past 5 years, or even let's go 2024 to present, we can see the total search volume based on 0 to 100. 100 essentially means it's the most popular that's been compared to the past. Well, in December of 2017, at the top of the market, Bitcoin was 100 out of 100. Now, in 2021, Bitcoin was 67 out of 100. So it was losing a little bit of interest. However, the price was much higher than 2017. And so where we are right now is we are at 18 out of 100, and we're barely off of the bear market lows from 2022, and I think we're right at the lows. I mean, you see right here, before the markets broke out in September, we are at 15. So the fact that we are at 18 right now tells me that retail does not care. And retail does not care because of what I just told you. The mainstream media companies that BlackRock controls is not ushering in their main marketing push to get it out there yet until they've properly loaded their bags, because they're buying millions of dollars every single day. If you guys watch my previous videos, I've shown you this. Now here's another thing to look at. The Bitcoin stock to flow model in this chart here, based on Bitcoin's logarithmic growth curve that shows the days until the next halving in this color code from red to dark purple. I've shown this in so many videos, but when Bitcoin halves, people think that, the market cycle follows Bitcoin's halving, when in reality it follows global liquidity. And so every time the global liquidity, M2, the money supply, expands, we see risk on assets expand, because smart investors understand that when you print more money and you expand liquidity, that devalues the spending power of the dollar. And they do this to basically just prop up, all markets. So every market is inflated because of this, but you can make money if you understand this. And so Bitcoin, for example, in the crypto market moves through 4-year market cycles based on global liquidity. And then when that's combined and stacked on top of Bitcoin's having to decrease the supply, essentially it creates more demand. And so when we look right here at this vertical dashed line, you guys can see when Bitcoin halves, we go through this consolidation phase that lasts anywhere from roughly 3 months, 6 months. We're right at the tail end of that 6-month consolidation as we go from red to orange. Now look at what happened when we went from red to orange back in the tail end of 2020. That was also an election year, regardless of who was elected, right? You guys know that Donald Trump lost to Joe Biden, and people were freaking out at first, but then guess what happened? The markets went up, not because of who was in office, it was because of global liquidity. So regardless of whether Trump or Kamala get into office at first, right? If let's say Kamala wins, right? Well, then what would happen there, in my opinion, would be a short-term temporary sell-off because her cabinet and her team is not as favorable for the crypto market. Gary Gensler, she'd probably keep him in office, the head of the SEC who's been attacking crypto. So there'd be an initial sell-off. But because global liquidity is increasing, then the markets would eventually catch up to that. Now, if Trump gets in office, well, he's come out and he's been a big Bitcoin bull doing interviews, and he's been big. He even launched his own crypto project. So that would be bullish for the market, right? And he said on day 1 in office, he would fire Gary Gensler, the guy who has been attacking Ripple and XRP, this entire lawsuit for the past 4 years. So if Trump gets in office, that would just be overall bullish news. But that's not the only indicator that we need to look at. We're going to dive into more in this video, but the Bitcoin stock to flow model shows us what happens roughly 3 to 6 months after Bitcoin's halving every single time. We see a rally up to yellow, and then we see another sell-off event takes place. So in my opinion, that'll take place between $100,000 and $150,000 is the next major sell-off and consolidation period for Bitcoin, similar to what happened back here from April of 2021 until like July of 2021, where Bitcoin went from $60,000 back down to 30, and then we saw the final parabolic. It wasn't even parabolic, it was just a double top, this blow off top. Well, in 2016, 2017, from orange to yellow, we saw this rally up, and then we saw these quick sell-offs of like 20 to 40% on the way up. And so this cycle is going to look different in terms of how big that sell-off will be, when it'll happen, whether we see more double top patterns similar to 2021, or we see something like what happened in 2017, where we just continuously go up and see 20 to 40% corrections on the way up. Regardless of whatever it looks like, that's going to bring me into my second point here soon, which is timing and exit strategy. But first, we need to talk about increasing your capital to be able to invest more into the market so you can have more skin in the game based on what you're comfortable of losing, because this is not financial advice. These videos are just purely for education, informational purposes only, because obviously crypto's risky. It's one of the most volatile asset classes in the world. And, you could definitely lose money in these markets if you don't know what you're doing. So you should always consult a financial advisor. But when we look at Bitcoin's chart, we can see if we measure from top to top, from 2013 until 2018, it took 1,477 days to go from top to top. If we measure from 2017's peak until November's peak, it took 1,428 days. So very close, 20, 40, like what is that? Like an extra month or two in terms of difference. And so if we were to just measure, let's say 1,428 days from the top of 2021, that puts us out to somewhere around October to like November of 2025 to December. So Q4 of 2025 is when the top of the crypto market is expected to be in. Now, sure, it's not going to be exactly on that date. There's a rough estimate, right? Because 1,477 from peak to peak versus 1,428, there's that little bit of a gap there. Like it could be 30 days, it could be 90 days of a difference. But what we're looking at is we're looking at the color schematic right here based on the Bitcoin stock to flow on Bitcoin's 4-year market cycle. So at light green is when the top is expected to be in. Now at the bottom of the screen, you guys can see the crypto total market cap excluding Bitcoin. This is total 2. So it's every single altcoin in the world. And so I've traced it up where you can see back in 2017 when Bitcoin topped out, the altcoin market topped out by January, the beginning of January. So like a week later, altcoins topped out. Now, it was more correlated in November of 2021 where both Bitcoin and the entire altcoin market that included every single altcoin that is tracked on this chart on TradingView, they topped out at the exact same time as Bitcoin. So roughly, I would expect, within a week period, 2 weeks period, the markets are going to be topping out the same time as Bitcoin. Now, there are some projects, though, that are lower market caps that will rally, maybe like a month to 2 months after Bitcoin peaks out, because investors that have already made their gains in Bitcoin and have got their like easy little 2x, 3x or 5x that invested early are going to be looking for those more degenerate plays that are 10x, 50x, 100x with those altcoins that are underneath, like a $100 million market cap or a $10 million market cap. So there will be those plays. We'll be talking about some of those that we see when the time comes for that. But right now, we're tracking Bitcoin. We're following Bitcoin, and we are accumulating more money to be able to put into the crypto market before that rotation of Bitcoin's dominance drops and it goes into the altcoin market as it has every single time. So the most crowded position right now is the markets are talking trash about Ethereum. So many people are saying that Ethereum's doing nothing. It's going to miss this cycle because Solana and Sui and some other altcoins are outperforming it. And yes, it's been bad. Yes, Bitcoin has been a better hold. Yes, Solana is clearly the speculative frenzy chain of the cycle along with Sui, but none of that matters because Ethereum is going to bid eventually. It's just a matter of time because the ETFs for Ethereum came right after Bitcoin's ETF were approved. And last cycle, once Bitcoin finally broke out above its previous cycle all-time high, Ethereum achieved outperformance for 360 days straight. Bitcoin gave the all clear, the green light, and then Ethereum pumped very hard. So I think a lot of people are counting Ethereum out. I remember last cycle when there was the same kind of attack on Ethereum that we're seeing right now, because I got into crypto in like 2016, 2017, the same victory laps and grave dancing occurred. And then the hate rally came where people were just pissed. They were coping because Ethereum absolutely exploded. Ethereum will pump hard, and Ethereum, plays on the Ethereum blockchain will also follow Ethereum, which I'm going to get into in a little bit. So the key to understand here in terms of macro market understanding this bull run is the word patience. It takes time to get to the end of a cycle. And we go through two types of markets. We go through a trending market and we go through a ranging market. Now the markets are either trending up or they're trending down or they're ranging sideways. During a bull run on the macro, they're trending up the entire bull run, and the bull run lasts roughly 3 years. A bear market lasts roughly 1 year. So we're going into the last year of the bull run, which is the most parabolic part. But during a uptrending market, there's periods of ranging, sideways, boring price action where we either slowly trend down, but either way we're trending sideways, going down while we're going sideways, which is what's been happening over the past 6 months. And then we go back into a ranging market to the upside once Bitcoin breaks out with clarity of who's going to be in office after that. And then regulation, right? Stablecoin regulation is coming to the market. And then we got like all the stuff happening overseas with Mica and then Ripple and XRP, which I'll talk about in a little bit. Now, the former SEC chair, Jay Clayton, who sued Ripple, is slamming Gary Gensler's crackdown on the crypto market. And he just came out recently in this interview on Fox Business right now and is basically a crypto cowboy that is super bullish on the industry. So we're seeing people, do a complete 180-degree turn. Like even Larry Fink, he was a big skeptic on Bitcoin, and now he's the biggest Bitcoin bull in the world. So I don't pay attention to what, skeptical relatives say that are broke, that work at, a construction job or something not stupid, right? Because they're actually doing stuff that benefits society, but they don't make the type of money that you want to make. What I watch is central banks. What I watch is what big institutions are doing. And then I watch the pivots that they're making on their belief system. So the belief is starting to change. And once the belief of the elite change that control the narrative of the masses of the sheep, they will basically put their belief out there to be able to change the narrative of a whole entire society. So listen to this.
Jay Clayton, the Republicans are the big beneficiaries of crypto PAC money. It's an interesting turn of events over the past, 4 to 6 years. What you make of it?
Well, I think it makes sense. Makes sense because it's clear that the Republican agenda is an agenda that's going to favor the adoption of this incredibly promising technology, and not just promising, proven, Larry. We see it every day in stablecoin around the globe. This is not pie in the sky. This is something that is working and should be brought to our markets. This can make our markets, particularly our markets that are at what I would say the cash end of the spectrum, work incredibly well. Think about what stablecoin is doing around the globe. It used to take days and lots of money to send US dollars around the globe. You can do it instantaneously for nothing. The same thing is going to happen to our funding markets, Larry. It's going to happen to the Treasury market. It's going to happen to the commercial paper market.
So as a former SEC chair, you think it's safe and sound?
I think the technology can do the regulatory job better. We just, as regulators, need to work with the industry to make that happen. So not only is it going to be more efficient, it's going to do the regulatory job better.
And you can weed out the crooks, because obviously there have been some horrible stories. I don't have enough time to go through it.
We should weed out the crooks.
You'd do that anyway.
Markets work better when you weed out the crooks.
And you'd stop the Fed and the Treasury from running everything. I mean, I don't want the central bank digital currency. I'm a Hayekian, if anyone knows what that is, Friedrich Hayek, Nobel Prize winner. Let's have some competition among currencies. Free markets, as you say.
And when I say stablecoin, I don't mean a government digital currency. I mean a bank or another creating a digital currency with competition.
You know, I don't think he always believed that. He's really come around in recent years,
Yeah.
Senator. You've had a terrific influence on Jake Late. You know, White Shoe Law Firm in New York, SEC chairman, very stiff collar guy. Listen to him. He sounds like a crypto cowboy.
Maybe.
Now, also, we have massive central banks getting in the crypto market. We have payment processing companies like MasterCard and even Visa diving full-fledged. On Visa's website right here, you can see that it says tapping into crypto's potential with pioneering global payments, advanced blockchain-based tokenization via Visa tokenized asset platform. And so essentially Visa and MasterCard are now figuring out how they can benefit from the crypto market. And we found a way to be able to capitalize, to be able to increase our capital to be able to invest more into the crypto market. Now, how we do this is very, very simple. And I'll give you guys an example here so you can understand this as we dive into the rest of this video. Look right here. Over the past week, we've been sharing this with you guys. And if you haven't seen those videos, well, essentially Visa and MasterCard lost a $5.5 billion settlement for basically defrauding businesses and taking money from them in processing fees. And so we've brought on about 154 businesses and 56 have been approved. And we've done over $118 million the past week in credit card processing volume. And we are getting businesses back that qualify about $1.9 million. Now, that's just the start, because as you can see, 154 have been submitted, 56 have been approved, there's 34 under review, and even more under reviewed. So these numbers are going to change. But within 1 week, guys, we are helping so many businesses. And if you want more details about how you can do this, whether you have a business or you want to be an affiliate to be able to earn from it, listen to this.
Hey bull runners, this is super time sensitive, especially if you're looking to stack more crypto before the bull run is over. Did you know that Visa and MasterCard lost a $5.5 billion class action lawsuit for imposing unfair fees on merchants and business owners? So if you own a business, or if you know any business owners that process payments with Visa or MasterCard between 2004 and 2019, that's 15 years, you could actually be owed a refund of 1 to 1.5% of your total revenue from that period. That's a lot of money. For example, this business that generated $1.6 million in credit card revenue during those years is getting back $28,000. This business that generated over $7 million is getting back $93,000. And this business that generated over $20 million during those years is getting back over $320,000. That's money they didn't even know was on the table. And all they did was fill out a form through the link below this video. It literally takes less than a minute to see if you qualify, but you don't want to wait too long because the deadline to file is February 4th, 2025. So the sooner that you fill out the form below, the sooner that you can reclaim what's rightfully yours. Plus, if you don't have a business, you can actually earn 3% by referring businesses that do qualify by creating your affiliate account through the link below. So this is a no-brainer way to get money back in your pocket to use for your business, or if you want to use it for crypto or other assets to invest in, you can do that. So click the link below. Let's get you paid.
Now, after you guys start your claim, whether you have a business or you create your affiliate account to be able to earn from sharing with businesses, over time, that's going to start building up. The more work that you put in, obviously, it's not, free money if you don't work it, right? If you have a business, essentially it just takes you like 60 seconds. If you don't have a business, you got to share it with business owners. And so we can come out with training videos for you guys and give you copy paste stuff to use. I've done affiliate marketing years and years ago when I was like 19 years old to 25. And, I've helped companies grow into the multi-millions of dollars. And so we can teach you guys a lot of stuff, but this is the best opportunity I have seen, hands down, in 10 plus years, because it doesn't cost you anything. It doesn't cost the business anything unless the firm and the company gets the money back from what Visa and MasterCard stole. And we're basically sticking it to the big guys and helping businesses get what's rightfully theirs and reclaim it. And so in terms of timing an exit strategy, well, the more skin that you have in the game, when you time the exit of these markets, you can basically make millions. And so in order to make millions, you're going to have to have more skin in the game. Like if you're just starting with $100 expecting to walk out of this market with $1 million, the likelihood of that is very, very low, because you're going to have to be a lot riskier with that $100 and play in the degenerate meme coin market and find something that would do 1,000x. And that's just not realistic, right? I want to give you guys a realistic plan to where you can have a business model and an opportunity over the next 90 days to capitalize on to increase your revenue. And then also your job, your other business, whatever you guys are doing, you just have more capital to invest. And then let's time the exit strategy on when to take profit. So for example, if we look at this chart right here, we can see that Bitcoin versus the crypto total market cap right here just shows us this stock to flow rainbow indicator. But looking at this chart right here really shows us what happens with the altcoin market when Dogecoin starts to break out. Now, Dogecoin is the retail indicator for me on this chart of what happens with retail, because Elon Musk, when he really started pitching Dogecoin, at the peak of the market, was on Saturday Night Live back in May of 2021, literally at the peak of the market. He was shilling Dogecoin, and then the markets dumped after that. So whether that was an inside job and the VCs were basically like getting Elon Musk to go out there and pitch it, same thing with Mark Cuban on Ellen DeGeneres. At the peak of the market, he was telling everyone to go create a Robinhood account and go and buy Dogecoin, and that it looks like it's just going to go up and up and up. It was at the peak of the market. And so why are they not really talking about Dogecoin right now? It's because they're getting ready and they're accumulating more quietly behind the scenes before the mainstream media push happens. Now, let's confirm this and let's verify this on the chart, and let's see what we're looking at. Back in the last bear market from January 2018 until we broke this descending resistance in July of 2020, we can see some similarities here. Dogecoin was in a downtrend, right? Found a bottom after COVID's low, started to break out. And right here, if you look at where I'm looking at, it broke this descending resistance and then consolidated for a period of time. This was in June of 2020. So from June of 2020 until November of 2020, about 126 days, it consolidated back down to back test this descending resistance as support, then broke out of it. And so in my opinion, where we are on the chart is very similar to where we were right here from November 2020 to December 2020 during that election year. And also, if we look on the relative strength index, the RSI was right here at 62. It saw a little bit of a pullback during that month to like 57, and then we broke out past 70 in terms of momentum, and we went all the way up here of 90 on that rally, cooled off for a little bit, and then all the way up here at 96 overvalued. We saw the next consolidation take place. Even if I mark this up on Bitcoin stock to flow rainbow indicator in terms of where we are going from orange to yellow, look at this, guys. This is textbook. We saw this downtrend right here during this bear market where Dogecoin struggled to break this descending resistance until February of 2024. It rallied all the way up to 22 cents, and it's been consolidating. And guess what it did? It came all the way back down to backtest this descending resistance as support, and now it's bouncing off of it. Very similar to what happened right here from October of 2020 until it finally broke out at the tail end of December. Now, looking at the stochastic RSI, we see some similarities as well too. We can see the D line is at the D line's at 85, the K line's at 100. That was what happened all the way back here in November of 2020 on that initial rally up. And then we stayed above 80 until that massive move all the way to 8 cents. So just because we're above 80 doesn't mean that we're overvalued here, because you look for confluence with other indicators. Also, you look at confluence for where we are with Bitcoin compared to it. And because Bitcoin is not breached into price discovery, it does not tell me that we are overvalued, because you can see that we were all the way up here until February of 2021. During that cool off period in this consolidation that you guys can see right here is where we saw the stochastic RSI turn all the way down and come all the way back down here to tell us that momentum was shifted for a little bit, and we were seeing liquidity flow out of Dogecoin into other projects for about 70 days, right? So a little over 2 months. And then we saw the final parabolic blow off top, and this was a bearish divergence, meaning that we saw a higher high on Dogecoin's price chart right here from January of 2021 until the 3rd of May, but we saw a lower high on these indicators. For example, the relative strength index topped out at 97, and then by the all-time high, it was at 92. So when we see a higher high on a price chart and a lower high on a key indicator like the relative strength index, that's a bearish divergence. It basically tells us the momentum has shifted over from bullish to bearish, because once you get up to 97 on the relative strength index on a weekly chart, like the likelihood of going above that is slim to none, because you can only get to 100, right? And so once we put in that lower high, momentum had completely shifted. That was the top of the market. Now we look for congruence here, and we look for confluence essentially. So we look for more indicators to be showing this. The stochastic RSI is another big one. Look at where it was. It went from here at 100 for both the K line and the D line, all the way down here to like 50 for the all-time high. So momentum was completely out of the markets, and Dogecoin was dumb. Not dumb. It kind of is dumb, right? That's the whole meme coin market in a nutshell. It's stupid, but it's for retail investors that, don't know that much about blockchain technology, right? To make a lot of money, guys, you don't got to be smart, okay? You got to be in the right place at the right time with the right opportunity and learn from the right people, okay? I'm a college dropout, so it doesn't mean you should listen to me, but I specialize in finding people that are very wealthy, that are smarter than me, learning from them, listening to them, and paying attention to what they tell me, because their track record based on their income shows me all that I need to know. That's why I pay attention to the big institutions, the central banks, right? They know how to make money. They don't need to have a big YouTube following or anything like that, or an Instagram account, or be a social media influencer, right? You don't need that to make money. You just need to look at what I'm telling you right now. So look at the stochastic RSI right here, all the way up here. Look at the relative strength index similar to past. Look at Dogecoin's chart. Look at Bitcoin's stock to flow rainbow indicator. If we break out, now I'm not guaranteeing that we're going to break out going into 2025, because all hell could break loose with World War III. We don't know, right? There could be a black swan event. That's definitely a wild card that nobody can see coming. It was kind of like the COVID, right? COVID meltdown. We couldn't see that coming. That just happened. And you have to have money on the sidelines to weather the storm. That's why I gave you guys that Visa MasterCard opportunity to leverage that through the link below. But to take profits, okay, when do we take profits? Now, this is what I'm looking at for a retail indicator. But what I look at also as well too is total two. And I stack on Bitcoin's pi cycle top bottom indicator that just tells me when the top is in. And so until that top comes in, I'm not taking profits until we are between yellow and light green. For example, let's look at the last cycle. I'm not looking at a price prediction for Bitcoin to take profits, because that's where losers lose money, right? I did that back in 2017 and 18, and I lost money because of that. I invested about 20 grand. My portfolio went up to 150 grand, and everyone was telling me when Bitcoin was at $17,000, $18,000, I was seeing it all over social media, Bitcoin's going to $100,000. We're going to sell when Bitcoin gets $100,000. And that's how all the dumb retail investors, and I was one of them at the time, got dumped on, because you were waiting for a stupid price prediction to take profits rather than looking at key levels, key indicators, and understanding macro liquidity and understanding Bitcoin's stock to flow indicator and these other indicators too. Now, these indicators are not like 100% accurate, right? Because as you guys can see here, the pi cycle top indicator came in while on the way up, popped in April 17, but hey, not a bad time to take some profits right there on the way up. You didn't lose money taking profits there, right? The key is not to lose money, right? It's, to maximize your gains while minimizing your losses. You're not going to sell the exact top every single time. You don't need to sell the top to make a lot of money. Money is made 60 to 80% of the way up, right? Because I didn't sell the top in November 2021 when Bitcoin was at 60 something thousand. I sold Bitcoin at $57,000, but I still did very well because I bought early. That's the real key here. Investing is simple. Buy low, sell high. Now, when is high? Well, the pi cycle high indicator has come in a few times in the past compared to where Bitcoin's been, and it's been pretty accurate the past few cycles. If we go to Bitcoin's price chart, you can see that it called the high in March of 2021. It also called the high to the T in December of 2017 for Bitcoin. It also called one of the highs back here in November 2013. It also called the high back here in April of 2013. So this is designed for Bitcoin. It's not really designed for the chart that I was showing you guys right here, because this is total 2. These are altcoins. But when that comes in for Bitcoin, then altcoins should top out roughly like a week or 2 weeks or less than that, close to Bitcoin's top. And so we're going to be watching that. Also, what I'm going to be watching, the relative strength index on the monthly, because as you can see, when the Pi cycle high indicator came in, the RSI in the monthly chart, which is a macro chart, was at 92 in overvalued territory, all the way above here, close to 100. Well, during the other Pi cycle high, let's just not even say the Pi cycle high, let's just say the top for the altcoin market, we were all the way up here above 80, and we stayed above 80 for an extended period of time during that bull run. So what I'm going to be looking for is the relative strength index to be peaking out somewhere above 80 to 100, and then we maybe potentially see a pullback like this, and then we see what's called a bearish divergence, where we see a lower high coming in on the indicator on the monthly, where we see a higher high coming in on the price chart. Now, it might not look like this because we're not even there yet, but when the market for the crypto market is upwards of 2, 3, 4, 5, or $10 trillion, wherever that's at, I'm going to be making videos showing you guys this. And also you can see on Bitcoin stock to flow rainbow indicator at that time, we were transitioning from yellow to light green when the RSI was dropping down and forming a lower high. The price chart was forming a higher high to light green. So anytime between this phase right here is an amazing time to take profits on the way up. Or when we go from green to light blue, you still can have some time to catch, that last complacency stage bounce on the way down. Now the markets are finally going to turn around because of this bearish divergence on the monthly RSI. Same thing right here. We saw from yellow to green, the RSI peaked out back in August of 2017 at 99. You can't go any higher than that, guys. You can go to 100, right? And then the market was at 85 billion for the total 2 chart, and then the markets rallied all the way up to about 400 billion for another peak, whereas the relative strength index was making a lower high, bearish divergence. So bearish divergence happened in 2017 to December of 2017. And then another bearish divergence happened in April 2021 until November 2021. And so could we see another bearish divergence at the end of this bull run cycle where the altcoin market does something like this, rallies up, we see a pullback, a major correction, maybe Bitcoin goes to like $120,000, then comes back down to 80 or 90, and then consolidates for a bit. That's the next consolidation phase, and then sees a parabolic blow off top. The market maybe gets to like $5 to $12 trillion for all altcoins. And then we see that bearish divergence take place on the key indicator where the RSI peaks out and it just can't make a higher high. And then we see the bear market start. I think something like this would take place. And the reason why is because it has every single bull run prior to this. So I look at probabilities. It's not even my opinion at this point. And that brings me to my next point, and that is portfolio diversification for high returns. Now, the best investors in the world are really good at doing nothing for long periods of time. Usually what I've seen happen is, I'll find a great project, I'll buy it, and then it'll take like 2 months, 3 months to do anything. It ranges, it's been trending, not trending, it's been ranging sideways, and it's not really trending up. Maybe it's slowly trending down to where I'm like down 10%. And then you see something else that's pumping, and then you buy into a green candle thinking that you're going to miss out, right? Fear of missing out. You let your emotions get the best of you. And then the moment that you sell what you were holding on to for 3 months or 6 months and you buy into something else, what you bought into goes sideways or down and it stops, the bull rally for that. And then what you sold goes up. That happens so many times to people because they lack patience, because they think the grass is greener on the other side, when in reality, they just needed to have patience. And so a diversification strategy that works for me is never having more, obviously, than I can afford to lose, but out of the dollar amount that I have in the crypto market, here's an example for you guys so you can be able to see this, right? 50% of my portfolio would be in large cap projects. And a large cap project would have like $1 billion market cap and up. 20% would be in mid cap, that's 100 million to 1 billion, and then 20% in small cap underneath $100 million. And then 10% would be in like stablecoin reserve to essentially just pay bills while earning like 4.7% APY through USDC on Coinbase or whatever it may be. There's other things that can offer higher APY, obviously, but the higher APY, the riskier it gets because it's unsustainable. Case in point was Anchor Protocol that offered 20% last bull run, which seemed crazy. It was a stable coin. It was on Terra Luna, but Terra Luna collapsed. That imploded. UST collapsed because they cannot sustain those high level of APY. So I just look for nice consistent yields that is 5% or less, anywhere from 4 to 5%. I'm happy, but during a bull run, this would be my portfolio allocation strategy. Now, yours might be a little bit different. For example, you might be less risk adverse because you're 60 years old, or you're 50 years old, you're getting closer to retirement. Like I'm in my 30s, so I can be a little bit riskier now. Depending on your age determines your risk tolerance. So adjust this accordingly, right? If you're younger and you have less money, you can afford to be a little riskier. If you're older, you have family, you have kids, you got a lot of bills to pay, you still have a job and all that stuff. Maybe you're less risky because, you got other obligations and you don't have as much energy or time to reclaim your capital if we go into a longer bear market at the end of this bull run. So maybe your large cap portfolio might be 70% or 80%. The key is you want to have the majority of your income in the large cap projects during this stage of the bull run. That's just me speaking out loud. Again, not financial advice, because Bitcoin still has yet to break the all-time high. So still holding some Bitcoin might be a good play. Like I can put some Bitcoin in there. Now, personally, I'm not holding any Bitcoin right now, so it's up to you guys. I do think Bitcoin will do well, and I think the next move up is going to be like a 2x. However, the large cap plays that I'm super bullish on long-term for this bull run cycle would be like XRP, XLM, just because it's obvious. Like there's been no other company out there that's been making as many bullish developments and has as many partnerships with central banks and big companies as Ripple. And why would the SEC attack Ripple for this long if they weren't the chosen one, right? That tells me everything I need to know. Whereas the average retail investor thinks that's a bad thing. Well, do some research, guys. Look at how many times the SEC sued Tesla. Look at how many times they sued Microsoft. Look at how many times they sued Apple. You can do a simple Google search and you'll see that it's called, in my opinion, it's called the rite of passage, essentially, to go through that regulatory hurdles until you get the clarity that you need. And then you get mass adoption, because first they ignore you, then they laugh at you, then they fight you, then you win. Ripple is going through the they fight you stage. That's why the SEC is fighting them. Then what's going to happen is Ripple's going to win. Why? Because they already won. XRP is declared not a security on the secondary markets. The only reason why this appeal is happening is because the SEC wants more money, and you can get into conspiracy land and say that it's all a show and that it's, just to delay adoption so there's more time for these banks to accumulate more. Whatever you guys want to believe and whatever research you found that can prove that theory. Well, either way, long term, I see XRP, I see XLM, as those projects that are going to be like the Amazon stock was back in the 1980s, 1990s, early 2000s over the next 10, 20, 30, 40, 50 years. So I'm treating those like the 401k that will not go away because it's performed well over a long period of time and it's clearly not going away. Look at what XRP has done by staying in the top 10 over the past few years, even while going through the lawsuit. So watch the other videos on this channel. We've proven it. I've shown you guys official verified documents from central banks and all of that stuff showing the partnerships, and it's undeniable. So then other projects, for example, that are having their first bull run, like SUI, is capitalizing on momentum because it's fast, it's cheap, it's cost effective, and Solana did well, so people are looking for other things like Solana. So SUI, Sol, very good. ICP, Internet Computer, amazing, awesome. Near Protocol, great. HBAR. I'm not going to do a deep dive into these projects in this video because this video is already long enough as it is. I'll do more, and if you guys want more projects as well too, you can go to bullrunners.com. Get on the early bird list, get started with our crypto education platform. We'll do deep dives and you guys will see from our research team how to structure a winning portfolio and other projects. Obviously, I'm not telling you to go and buy these projects. I'm just sharing you my thesis, what I see happening on the markets, and then what you choose to do is up to you. And then if you want to learn more in the moment about what our research team is finding, spotting, because the time that it takes me to do research on these videos, we get these videos edited from our team, we upload them onto the YouTube channel, and then they're pushed to you. And by the time you watch it, it's probably too late because these markets move so fast. When opportunities pop up right away, we share that with our inner circle, and that's what we're launching. So you guys want to check that out. But when we go back here and we look at this and we talk about portfolio diversification, I just gave you guys that. Let's talk about emerging sectors, what I see happening. For example, layer ones are the first cryptocurrency someone would get when they come on a specific blockchain. Like for example, Ethereum, they would buy ETH to use ETH to trade for other altcoins on that chain. BNB, that's the Binance Smart Chain. You got Solana, it's a layer 1. We got Tron, TRX. We got Toncoin. We got Cardano. We got Avalanche. So in general, as the tides rise, the layer 1 ships are the leaders of each of these blockchains. And then on these chains, there's certain narratives that are going to do the best this bull run based on where we are right now. So for example, last bull run cycle, I was talking about how artificial intelligence is still so new that the last bull run, there was nothing really that tangible yet because AI was still too new in the infancy. But now that we've had ChatGPT, now that we got these AI image generators, we got these AI like voice softwares, it's just the craziest thing ever. This is where AI is really starting to gain mainstream adoption. Now for the next bull run by 2030, I think it's going to be full-fledged AI. It's going to be some of the craziest stuff we've ever seen. So this is like the middle of the gap bull run for that. So artificial intelligence will do well, but basically like Near Protocol, for example, is a layer 1. We got Internet Computer is a layer 1. HBAR is a layer 1. Algorand is a layer 1. So I have a few of these projects right here that are layer 1s because when Bitcoin does well and that rotation happens into altcoins, then that money, the liquidity goes into the layer 1s mostly, and then it trickles down the chain into these other not industries but sectors of the crypto industry. So for example, meme coins, that's one hot narrative that you want to keep on your radar. Artificial intelligence, gaming, real world assets. Now I don't deal too much with decentralized physical infrastructure. I can only focus on too many things, but the main categories of crypto that I'm the most bullish on are meme coins, number 1, just simply because of how retail adoption is working and what BlackRock's planning on doing to push to mainstream media through Dogecoin. That's number 1, whether you love it or hate it because of, the lack of utility. I don't care. Nobody cares. All that matters is what the markets tell you so you can make money, and then you can rotate that into the high value plays that have the highest utility essentially. And then the projects that are going to have the most utility long term will be in like the artificial intelligence, is number 2, and real world assets. That's kind of a toss up. Like I think AI is a lot more exciting for people than real world assets just because it's more pandering towards the common folk because they can use ChatGPT and stuff and they just better understand through it, like watching the Terminator movie or whatever it is. Whereas real world assets is still confusing. Like how do you tokenize stuff on chain? How's that going to work? And that's really for like the large institutions and VCs to really grasp it right now. So people don't know how they're going to tokenize real estate. They just hear the concept. It sounds cool. It's exciting. But meme coins, AI, real world assets is going to be really big. And then gaming is a 4th one. Now gaming has some of the highest utility because you can have in-game currencies where you can use the currency to play the game. So it's actually more usable than a lot of the AI projects. Most of the AI projects are still fueled by speculation, but so are gaming projects right now. Like a new game project that launches that gets a $1 billion valuation or $500 million valuation, but yet barely even has their game out, makes absolutely no sense because of speculation. So regardless, these sectors right here have the most amount of speculation right now, regardless of a product being done or not. And so when you go to bullrunners.com, you guys will learn what to look for and what to look out for in each of these sectors and how to do, research on tokenomics, teams, do different audit checks, check all sorts of different stuff in terms of the smart contract, in terms of the creator address, and look for red flags like massive token unlocks, a certain percentage of holders holding most of the supply, liquidity checks, all of that good stuff. That's what we're covering. Our research team is going to work with on you guys inside of bullrunners.com. There's even more altcoins that we're looking at that we hold in our portfolio that we're adding to our watch list. And if you want to see what those are when we spot them on top of what we've already found, then what you want to do right now is go to bullrunners.com, click the yes, reserve my spot on the list right here if you haven't done that yet already. I understand you might be skeptical, but worst case scenario is you learn something new and it's not the right thing for you. That's completely fine. You don't have to stick around the campfire here. We provide these videos for you for free to give you guys information because I've already made a killing in crypto. You know, I do this for fun because obviously I don't work a job. So I like watching this information. I like sharing it with you guys. I like providing value. And if I can spot some alpha or some information that's going to help change the game for you to get through whatever financial hardship you're going through right now, then that makes me feel good hearing your testimonial, because your results are essentially our results. If we're not helping you getting results, then we're not doing our job. And so when the early bird list closes, you guys want to get access right now. Best case scenario is this actually works for you, and you actually take this information, you apply it, you become a massive success story in our community, and you become the first millionaire in your family tree if that's your goal. Or if you just want to earn some extra income to be able to, you know, cover your mortgage, cover your daily bills, all of that good stuff, learn about APY, learn about yield farming, learn about different DeFi strategies, different airdrop farming, all of that cool stuff. Our research team is going to be talking about all of that, sharing with you guys everything. We've been working long and hard on this, and it's almost time to launch to the general public. But because you're on the early bird list, you'll be notified first simply by going to bullrunners.com. So I appreciate you guys. I look forward to seeing you on the inside. I look forward to seeing you on the next video. As always, you know what to do. Stay bullish.